Hello and welcome. I'm Valerio Baselli and today I'm joined by Ben Wallace. He's a senior investment manager of UK equities at Janus Henderson Investors. Hi Ben, and thanks for being here.
My pleasure, nice to see you.
So Brexit is coming, as we all know, and time is running out for a deal. The last issue on the table concerns EU access to British fishing waters, which is another example, I think, of how complicated these negotiations are. First of all, tricky question for you. What do you forecast on the deal, no deal gate? And how a fund manager like you get ready for a change like this one with different possible outcomes?
Sure. So I think our central scenario is that some form of deal will ultimately be done. But I think our perception is that it will be a relatively, if you like, skinny deal. We're not going to get the all singing, all dancing trade deal that maybe was envisaged at the beginning of the process. But equally, we think there's enough mutual interest there to get something that allows both economies to continue function, but also respects each side's red lines. So I think there's enough goodwill there for a kind of sensible landing area. In terms of how we position for it, we've positioned the portfolio to benefit from that scenario. But I think very importantly, we've made sure that whilst the businesses which we might be long of or own might benefit from it, we're equally happy to own them even if things do go badly and there's a no deal. So we think they're good franchises, good businesses, and ones that can survive even in a no deal Brexit. What we would never do is purely buy shares that we didn't like on the hope that a good deal happened and somehow they went up. So that's how we've tried to position the portfolio.
Looking at flows, UK large cap equity European domiciled funds enjoyed strong inflows in March and April, backing the general trend actually. But since then, the UK market has been out of favor as UK stocks have continued to underperform other equity markets. What is your take on that? You manage the UK absolute return strategy. How your exposure has evolved since the beginning of the year, for example?
Sure. I think the point you make is right, that whilst there's been a little bit of interest in the UK at various points this year, I think ever since the Brexit vote, if you like, the UK has been an area in quite considerable net outflow, which has led to some kind of attractive valuation starting to emerge in the UK stock market, almost because of that kind of technical selling pressure. So what we've seen in the portfolio over the year is obviously the FTSE is a relatively international index, as obviously you know, but we have increased our exposure slightly to some more domestic orientated areas of the market. So specifically some areas of house building, a few selective insurance companies, and then we've actually removed our short positions in the majority of UK banks, which we had for a couple of years. So that's been the main way we've tilted the portfolio.
All right. Finally, what do you expect for next year when the UK will be out of the EU for good? And might Brexit be positive for UK small caps, at least in the short term?
Yeah, I think net, some form of resolution on Brexit will ultimately be good for the UK stock market and the UK economy. I struggle with the concept that Brexit in itself is economically beneficial to the UK. I think net the UK would have been better off remaining where it was from a purely economic standpoint. But where I do think there could be a big benefit is more money coming back into the UK as a lot of international investors worry less about Brexit risk. I also think we'll see a considerable pickup in inbound M&A activity because all of a sudden corporates have got a bit more certainty, there's a bit less currency volatility, and therefore they're kind of willing to actually potentially purchase some UK companies that look relatively lowly valued compared to their international peers.
Thanks so much, Ben.
My pleasure.
For Morningstar, Valerio Baselli, thanks for watching.